Good morning, it's Tuesday 26th of November. The stock market is actually down about 20 points this morning after a very strong day yesterday. Now it's strong at the moment not because of what's been happening on Wall Street, but because there is another M&A or takeover frenzy on the Australian market. Now I won't go at length into the takeover bid for the Australian Stock Exchange by the Singapore Stock Exchange, but that did push up financial shares yesterday, and we'll see what happens there. It is going to take 6 to 8 months before it's complete, but it does show to many people the value that is still inherent in the Australian market. Of course, last week we saw the private equity firm KKR make an indicative bid for Perpetual, the big funds management company. It's $38 to $40 a share. Perpetual shares are trading just a little bit below that. The company has said that the offer is inadequate. However, they will open their books to KKR, presumably in an effort to try and get a higher offer. Numbers of around $44 a share is apparently what the sort of offer the board would apparently accept. In the gold sector, we've had Equinox Mines decide to bid for Citadel Group. That's two mid-cap gold producers and copper producers. And with the merger of Newcrest and Lihir a couple of months ago, you actually don't have any sizable companies in gold anymore, apart from Newcrest in this country. So you're seeing the mid-cap miners now attempting to merge to try and create the next big company. Kingsgate Consolidated is another mid-cap miner. It's got 2 bids running at the moment, one for Dominion Mining and one for Laguna Resources, both pretty small companies. But again, that theme of mid-cap miners now wanting to become bigger miners and attract investment dollars as a result is very, very strong. So, as I mentioned, good long-term value in our market. The market was up strongly yesterday, but it is down today primarily because of uncertainty over the stock exchange deal. Overnight, of course, we had several senior politicians, Bob Brown, Bob Katter, Joe Hockey, say they weren't sure about the deal, and for various reasons their approval of it may be necessary. The Australian dollar continues to flirt with parity. Now, over a week ago, it briefly hit 1.003 US cents. It slid back a bit since then. Remember, the US dollar is a very, very oversold currency. Now, some people are full of doom and gloom about the future of the US. I personally think eventually it will recover. So we just need to be careful with drawing sort of straight lines on graphs and saying, oh, well, because our dollar has been going up, therefore it must continue to go up. There's been that many instant experts emerge in currency markets over the past few weeks. Right now, the dollar's about 99.2 cents. My view is, if you're someone who's thinking about taking an overseas trip, or you're someone who buys things from overseas via the internet or whatever, if a high dollar is good for you, take advantage of it now, because previous history with the A-dollar tells that as quick as its rise can be sometimes, it can also fall quite substantially in just as quick a time. And finally, the gold price is the other, I guess, beneficiary of the weak US dollar. It continues to flirt with around about 1,350 US bucks an ounce, which is pretty much the highest recorded price in human history. And again, it's the reason why so many of those mid-cap gold companies are looking to expand.